Well, good. Hey guys, thanks for coming to the show. It's called Options Brew TV. We're on YouTube. Don't forget to subscribe. Two great gentlemen here today. Tom up in the top, the fighter pilot, right? Tom Nunamaker.
Yep.
I got that right. And then
Perfect.
Wayne Klump. Did I get that right?
Yep.
Okay,
Beautiful.
so these two guys are somehow connected in terms of business. We're going to let them explain that. I think Wayne, you correct me if I'm wrong. You're a little bit more into the portfolio management side of things, and then Tom, I think a little bit more option centric. But we'll let you guys get into it. Does that sound about right?
Yeah,
Perfect.
exactly.
Yep.
We paired off together really well, and we've kind of converged things. And I come from, esoteric strategies and portfolio design and risk management,
Mm-hmm.
and Tom comes from an options background. I did option strategies as well, and so that's kind of how we ended up blending together. And then, I designed something that I call the Sleep Well portfolio that I was using with some clients,
Mm-hmm.
and I said, well, and I had some feedback from them, and they say, there are lots of people that could use this. And so Tom and I got together and said, hey, you know what, let's take what I've been doing for a while and simplify it, and then get it to where some other people can get a hold of it. And so that's kind of how we met up. And so, Tom can give you probably some more details and
Yeah.
his background. So
Tom, how about you? That's good stuff, Wayne. Thanks.
Yeah. I started with options back in '82. Tried to get a job on the floor of the exchange. One of my teachers in school was a market maker. I don't know if you knew Mark Harmon or not. But
The actor, right?
no, the options trader on the floor. But anyway, didn't get hired, joined the Air Force, flew for 20 years. As I got retired from active duty, I had more time for this option stuff again.
Mm-hmm.
Took a mentoring course, ended up working for Dan Sheridan, did all his IT stuff for like 6.5 years,
Right.
and then split off. But I kind of had an options trading community for a long time. We have like a futures guy and a forex person,
Mm-hmm.
so kind of spread out a little bit. Still, my expertise is mostly options, but
Okay.
we have a nice community, and I basically do all the programming and build the infrastructure, and that's how Wayne and I kind of merged together. I'm doing all the back end stuff and the IT stuff for Wayne, and also doing options trading as well and running the community.
Great. So the community is correct me if I'm wrong too, it's aeromir.com. And we're going to put this in the video so it's a call to action to see it.
Right.
Is that correct? Is that the grander home? And then is Sleepwell a subdivision of Aeromir, or are they how does that all
Yeah,
work?
Aeromir again is a trading community, but there are different experts that have different trading systems. Wayne's one of the experts. And
Perfect.
Aeromir, by the way, comes from my Dungeons and Dragons character name in high school.
So, okay, well, God, that is good background. I didn't know that. I wasn't a Dungeons and Dragons player though, so I would not know that. That's good.
It always intimidated me, the amount of imagination that has to come from Dungeons and Dragons, right?
I know. I wasn't smart enough for that. Sorry. Well, that's great. So, Tom, you and I have a common background. So it sounds like you were on the floor in Chicago a little bit.
Just trying to get a job.
Yeah. Oh, okay. So yeah, that was my home, as we talked about it a little bit earlier. So pretty familiar with the floors in that world. I certainly know Dan Sheridan. I remember bumping into him on the trading floor every once in a while. He had a nice little perch. He was kind of over beyond us in the OEX. I don't know if you guys use that product anymore, but the OEX, and it was a big index crowd. And I was more on the equity side, the equity options. So we were considered like these little nerdy brainiac kids. They just put all of us over on one side and said, leave us really smart, big time traders alone. We know our stuff. We're in the index. So
funny.
Yeah, it's the truth too. But it worked. We all did our thing. So
nice.
All right, good. So Wayne, tell us a little bit about Sleepwellinvest. So you have a little, from what I'm reading, you have a little bit more of a macro portfolio viewpoint, I think. Tell us a little bit about that. How can it help the retail investor? What can they learn from it? My first thing I'd say is, so many folks I talk to, retail folks, I do a lot of demos. I talk to a lot of them. They always ask, Lex, I need a trade idea generator. I don't have any idea what I'm doing. What can I lean on? So they love that kind of stuff. I don't know if that's your wheelhouse, but man, I know you guys have been successful, and there's got to be some good tidbits you have for the folks.
Yeah, the retail need, or just the retail investor, and that's exactly why
Hmm.
Tom and I blended together to bring the Sleepwell portfolio out. It's not necessarily a trade idea generator,
Hmm.
although there have been subscribers that talk to me on a regular basis that use the principles from the Sleepwell portfolio to generate trade ideas. So it has actually helped them in that regards. So it's always funny how things end up turning out that you didn't expect. But the uh, the main concept behind the Sleepwell portfolio is that it takes the macroeconomic cycles of um, dollar deflationary cycles, dollar inflationary cycles, and then economic growth and economic contraction, and it uses assets that perform differently during those different environments, and is kind of tuning to what assets perform better in this type of environment that we're in, right?
Hmm.
And what that ends up doing is it fills a need that so many people have reached out and just need, which is something that can perform consistently year after year, that doesn't have these massive holes in it like the old typical 60/40
Sure.
portfolio, 60/40 bonds, or just a pure equity or indexing, right? Indexing is such a hot word right now because stocks have been going up so strong, and all these wicked V bottoms, and right, stocks go to the moon forever. We thought that in the 1920s. We thought that in the 2000s too, when speculation was really big, and that's just kind of how things were. I'm not saying that we're in a bubble by any means, but although that could be argued, the concept though is that what's going to perform, what type of strategy, what type of investments are going to perform on the backside of those, or when we go through a lost decade or something like
Hmm.
that. And there are assets. Stocks get a huge focus,
Hmm.
but the market is huge. There's bonds, there's forex, there's commodities, and there's also how emerging markets play off of dollar deflation and dollar inflation. So we compare those in a really simple way,
Hmm.
and
Got
that's
it.
what the Sleepwell portfolio was. Is it really was taking really complex ideas, really um, things that the typical person doesn't run into, except for us in the business kind of know about, and simplifying it into just the easiest thing to follow possible. That's kind of where it all
No,
ended up
nice.
coming to.
So do you guys, you didn't say the magic meme word Bitcoin. So anything there? I mean, listen, I'm hoping you say no.
No.
So you haven't gotten into the Bitcoin thing yet.
No crypto stuff, Bitcoin,
No
none of that.
crypto, Bitcoin. Okay.
So I'm not using, so another asset in a portfolio can be a great thing. Um, because it can diversify things, right? If you have an
Right.
options strategy and you pair something like a Sleepwell portfolio with it, it's a
Mm-hmm.
great thing. Can Bitcoin be thrown into something? It's another asset that moves. It's highly speculative and has almost no intrinsic value.
Mm-hmm.
So that's kind of in the same similar situation that we had in the dot-com era, where we had a lot of internet companies
Yep.
that were trading wildly and you could make a boatload of money on them, but in the end they didn't have any intrinsic value and they flopped at the end, right?
Right.
Some
Right.
of them survived, but very
Mm-hmm.
few, and only the ones that could generate cash flow, right?
Right.
Can a cryptocurrency do something other than being a store of value? We use gold in the Sleepwell portfolio.
Mm-hmm.
That does store value, that has a long track record through many hundreds of years in human history. uh, so yeah, can it be something there?
Right.
Maybe. Does it have its proof yet? I couldn't really speak to that by all means, but
Sure.
uh,
Sure.
before the Bitcoin crash recently, I just haven't been a big fan of it. I don't like the fact that it just doesn't have any intrinsic value.
Good. Okay. Good answer. So Tom, how do you fold into this Sleepwell? Is there a synergy with what you're doing with Wayne? Are you guys completely separate? Why, help me understand that a little bit.
Well, again, Wayne's one of the experts that we have.
Yep.
So we have people that do futures, options, different things. So I like to tell people that don't, like Wayne said, don't follow one strategy. So maybe you like one of our options trading strategies and you have some money invested in that. But what are you going to do with the rest of it? You probably don't want your whole portfolio in that one strategy.
Mhm.
So the sleep well is a great place to put that extra cash. And even if you're not a trader, if you're just an investor, like your mom, your friends, or whatever,
Sure.
the sleep well is a really great investment. The thing that really attracted me to Wayne's performance was, I think since 2007, correct me if I'm wrong, Ray, but the max drawdown was just slightly over 10%
Mhm.
versus the market, 35, 50% sometimes.
Oh, that's great.
So it's that more smoothed out equity growth. You're still getting nice return, but you can sleep well at night, like the
Oh,
portfolio is called.
there you go. I love it. So it seems like the model in my head, at least, is Aeromir has an ecosystem of educators. Is that
Right.
sort of it? And Wayne's one of them, and there could be others. And you,
Exactly.
as a retail investor or trader, can kind of pick from the ecosystem which.
Right. And we have trading groups, forums, guest
Yep.
speakers, so all the
Great.
stuff a community has. But then if you want to follow an expert, there's multiple to choose from, and Wayne's one of them.
Good. Okay, I understand now. Good. And Wayne, so you mentioned a lot of assets that can comprise a portfolio, right? Um, let's say I want to be, I want to follow you. How what is the mechanism? What do I have to do in order to make all those trades? You put them into a fund of sorts, and I click a button, and voila, based on my risk tolerance, they all pile in, or is it a little trickier than that?
Yeah, that would be something that we've definitely discussed is
Yep.
can we convert this into an ETF and stuff like that, which that might be something in the future. For now, a lot of people really like to have their hand on the steering wheel a little bit more, and
Mhm.
so what it is so I've got a portfolio, and what I do is I send out every week how my allocations are shifting, because it morphs based on what the macroeconomic pressures are at the time.
Mhm.
And so sometimes I'm really heavy. The models are really heavy into equities and maybe bonds, and sometimes it shifts into all equities, or sometimes it shifts into equities and gold, an inflationary cycle or something like that.
Mhm.
And so that as we ebb and flow, right, each week there's a slight change to the allocations, and uh, I put that out there on aeromir.com, and then we have a platform that you can actually type in, hey, how much money would I
Mhm.
kind of want to put in this, and then what would that look like, and how many shares of each type of ETF would I want. And I use ETFs to get these because they're simple, it's clean,
Sure.
and each ETF is typically really highly diversified. So yet again, it ebbs out the flows, right? And
Mhm.
everything can be smooth, but
Yep.
everything was made as simple as possible, right? We tune this down into what can be 50 different assets, right? 50
Mhm.
different types of things that you'd have to be monitoring and manipulating, it all down into six to keep it as simple as possible. And so it's really clean and easy, actually.
Oh, that's good. So, it sounds like it's not super time sensitive. So you're sending out emails, I would say, right?
Yeah,
Um,
emails, trade
on
alerts.
reallocations.
Right, they can even come in and text message and stuff
Okay.
like that, but you just log in and you can see what the allocations are. And that's kind of what Tom was talking about too, is if you're trading this or you're trading that, and you've got your own systems, that's great. But get something that can be like a little bit diversified from it, or with some sort of extra cash that you're not using,
Mhm.
that doesn't take a bunch of time. Or
Sure.
maybe there is a strategy that does 50 or 60% a year. Great, that's fantastic. But
Mhm.
then it takes you got to check it 5, 10 times a day, or just once a day. And
Right.
some people just don't have that time. And so the sleep well portfolio is just 5 minutes once a week.
Nice.
So
Nice. And where do you rank it on the conservative meter? 10 being really risky, which I know it's not even anywhere near there, but so pretty conservative. It sounds like, right?
yeah, so it can be tuned, right? So
Mhm.
so the base sleep well portfolio is just straight ETFs. It's very conservative per se. So like I said, like Tom said, actually, about a little over 10% risk is about what we're going to see
Mhm.
for
Mhm.
maximum. Typically, you're only going to see maybe 2, 3, 5% in there, you know, a little bit, about half of what the typical index S&P does, right?
Mhm.
And it's going to perform sometimes better than the S&P, sometimes flat with the S&P, sometimes a little under. It's uncorrelated, right? But if, you know, say someone wants to juice it up a little bit, so I've got personal accounts that use leveraged versions of the ETFs,
Mhm.
and now you can start outperforming regular indexes because we can take that reduced volatility in it and amplify it and get the returns from it without taking the same risk as, say, what the S&P does or something
Mhm.
like that, right?
Yeah,
Yeah.
I've got a drawdown chart. Maybe that would be helpful to
Yeah.
show.
Go ahead,
Right,
Tom.
right.
Do the Zoom screen share. There
Yeah.
you go. Look how
Can you
good
see
you
it?
are. Yeah, heck yes.
All right. So the red is the SPY and the blue is the drawdown for the sleep well. So you can see why this is attractive to an investor.
Right. So what are we looking at time wise? I'm just trying to get my bearings here.
2007 is back at the
Okay,
left.
so 2007 all the way over here,
Yep.
and we're looking all the way out to current day. Is that right?
It's
Looks
close
like
to current day.
looks
Close to
like
current day. I see.
December last year.
Yep, understood. So, and that's just for viewers. That's way over here. Red line you said was SPY or the
The
S&P. Let's say.
spiders. Yep.
Yep. And blue line is
Is the
Wayne's
sleep
World,
well.
right?
Wayne's World. Yep.
I love it. So
Now,
we can clearly see that Wayne's World is doing way better, especially back here in the '08 world of the financial crisis, right?
yeah, look
Yeah,
at
or even in
50% drawdown. Yeah.
Yeah.
yeah, and what's beautiful about '08, not beautiful because there was a lot of people that lost a lot of money, so let me not just skim over that, which I'm
Mhm.
so sorry about that. But what's nice about '08 on the positive side is it was a long macroeconomic cycle,
Mhm.
right? So that we had dollar deflationary periods, we had lots of stimulus, and we had lots of interest rate cuts, and we had a long way to go. And so we could use that, right? And that's why the sleep well portfolio just basically kept trugging along, you know,
Sure.
making money during those times. COVID was a little bit different. We had a very quick
Yep. That's
snap,
here, right? I think.
Yep.
right?
Okay.
So there was a really quick snap of dollar deflation
Mhm.
or a really slowing down of dollar inflation, and we could use that, right? And it turned around so fast though. But then on the positive note, the reason why we started to outperform the S&P is because there was a long cycle, a relatively long cycle of dollar inflationary time periods
Mhm.
with low interest rates. And so we could just maximize that by being a little bit more aggressive invested into like high beta, high growth type of assets like, you know, small caps and things like
Right.
that.
Understood. So, this your analysis from a macro level when you
Uh,
when you rotate your portfolio. And I might not be saying that right, but let's just say
it's
you're
beautiful.
okay. So when you change the weight of your portfolio,
Mhm.
is that a machine learning algo that's going on, or is that Wayne in the background, like I am with my pencil going like this, one of those deals?
Yeah, yeah. Definitely not with a pencil or anything like that. But you know, of course, there's always merits to a human thinking about things,
Love it.
right? And
Yeah.
so there is a mixture of both the concepts and long term overarching principles of risk management, which you have a huge background on trading on the floor, right?
Hmm.
Which is just, do I have higher probabilities of X happening versus Y happening? And
Sure.
if I do have higher probabilities of X happening, what's my risk in when I'm wrong versus when I'm right? And so using those risk principles with that macroeconomic theory and with machine learning and algorithmic theory, or can we blend them together? And that's
Hmm.
really where it comes down to. Is it always right? Absolutely not. Is it always right? If I was always right, you know, it would.
You'd never have a drawdown.
Yes, yes.
Did you
I'm
say
working on
never?
that, by the way.
Oh,
Yes. While I'm working at that, though, you know, the system isn't always perfect, and
yeah.
especially if anyone that studied, you know, macroeconomic theory and stuff like that, it's not a perfect game. It's not a perfect the applied macroeconomics is always a little bit different,
Right.
and you can get out ahead of it a little bit, and the system does that. But at the same time, really, it's where's the risk right now, and do I have, you major risk if I'm wrong on this inflationary call, right? Is there a lot of volatility in an asset that I'm going to push into with that type of risk, and where can it go wrong? And so that's kind of all of that blended together and then balanced out across the portfolio to just keep it as consistent as possible.
Okay, good. Let me ask you one more question right now and jump over to Tom afterwards.
Sure.
Do you have any strong opinion on inflation? I know that's a question I get a lot, and I always tell folks, I said, listen, you're asking the wrong guy. I said, I'm going to ask a guy who really understands. Wayne might understand this. So, but you hear a lot about, we're printing money, lots of supply of money in the system. So not enough product for that supply. We know what happens. It becomes inflationary. I get it. Any thoughts on where that's moving? Continued higher, or we're going to subside here? And I'm not going to hold you to it either.
A fantastic question, and yeah, no crystal balls or anything.
Right.
And as a mechanic, right? I have a background as an auto technician, so I kind of think mechanically and engineering based. And so looking back at history and how it's worked out in history, right? We had a lot of this talk in 2009 and 2010, right? And that's not too far in the recent past. And did the inflation come? Absolutely. Did it come in the same way? Not so much. So we're in a fiat currency world, right? And since it's not backed by a hard currency, or a hard commodity, and it's more of the central government and the economy, what happens is it's kind of all the boats versus what is my boat doing versus your boat, right? And so is the tide going up? Absolutely. Global inflation is a very real thing, right? And there's lots of printing, lots of stimulus out of lots of governments, and the system is all about weakening currencies, right? And keeping a certain amount of inflation. And when we all do it together, all countries at the same time, you have that inflation. That does not translate into it does not always translate into a weakening dollar, though. Yes, based on a commodity it might, but versus a service that I get from maybe the UK,
right?
Well, is their currency falling faster than mine, right? And so that's where we get this relative inflation. So what I talk about, so part of the Sleep Well service is we just talk about, I write out a weekly commentary about things like this, actually. And so there's actually a high probability over the last half of this year that we get a stronger dollar, and we've actually already seen this dollar strengthening. We get a stronger dollar versus other currencies, while at the same time we still have global inflation. And so that macroeconomic play is a much different play. It typically does behoove the reserve currency at the time,
right?
Most of the time.
Cool.
So hopefully that answered that.
No, it did. Very good. Thank you. I appreciate that. Yeah, I just get that question a lot from some of our audience on inflation. So it seems to be a little bit more of a hot button sort of issue of late.
Inflation, global inflation up, absolutely, definitely. I'm on that boat. You see it historically. It's happened there. Relative inflation is going to ebb and flow a little bit more, and right now we're probably in more of a deflationary time period, which can create its own problems.
Right. Understood. Okay, good. Thanks for that, Tom. So how does your offering in your room or whatever you're doing, I know you like to trade a lot of SPX. How does it differ from what Wayne's doing? Now, Wayne, I would describe as a little bit more macro portfolio based, let's call it, just as a thumbnail. If someone's subscribed to you and what you're teaching or whatever you're doing, can you explain a little bit about that part of it?
Yeah, we have several experts. One is a day trading system. He calls it the Night Owl, and that's overnight futures trading. He sets orders, and sometimes you have to get up in the middle of the night to trade that, but that's flat every day.
Can I make my wife do that? Get up in the middle of the night?
Well,
she did might with be our babies when I had babies. I mean,
she might be happier if you're living in Europe because you're trading the European hours mostly.
That's my need.
There you go.
And then the option strategies are mostly, let's see, the boxcar is more 2 to 3 week time frame, and then we have another one that's a little bit longer, like
what's the boxcar? What, sorry,
It's kind of like an iron condor with less risk on the upside.
an iron condor with less risk on the upside. Okay, so you've constructed this somewhat of a spread, and you call it a boxcar. Was it
Yeah,
ratioed
because
out or something?
yeah, the guy who invented it, Dan Harvey, he said to him it looked like a boxcar train. So
Oh, okay. I love it.
that's why he called it that. Yeah. It's basically just an iron condor with your the majority of it's below the market.
Oh, okay. Got it. Got it.
Yeah.
Interesting. Okay. So, and so that's one of the aspects of it. And do you teach, options 101? What is it called? What is it put?
We do have the guy who actually runs the boxcar trailer service, Tim Pearson. He also runs a trading group called the Beginner and Small Account Trading Group. So he does that every week. I run a trading group on Mondays. It's got a lot of experienced traders, mostly options guys, but people come in and ask questions, or if they have a trade in trouble, they can ask for everybody's 2 cents.
Sure.
It's a community. So
people can type back and forth to each other. There's no speaking in the community besides you, right? I'm assuming.
No, they can speak.
Oh, raise a hand?
It's a meeting.
Okay.
It's a meeting. Yeah. And
Got
then we also have one-on-one mentoring. Some people do that if they want that individual attention, but
okay.
Yeah, that's
cool.
That's actually how I got to know Tom. And so Tim Pearson's a friend of mine, and the Aeromir is a free community, and so we were just talking, and then that kind of spurred up friends and things like that. So that's exactly where Tom came from.
That's good. Yeah, I find that there's all kinds of communities out there in our world, in our trading world, right? I think it's a good thing, right? People need some reassurance. I'd even say somewhere with our experience, it's nice to hear someone's opinion on what you're thinking about. I think, especially since I can't see order flow anymore, so I really need help. So
and we're not charging for the opinion. It's a trading group or forum. Yeah.
Absolutely. And exactly what you talked about, Lex, right? Here, metaphor that kind of pops in my head is, I see a mountain in front of me and it's huge, right? The stock market and just markets in general are just massive, right? Conquering that by myself is, oh man, that's a big mountain to climb. And that's
right.
But if I've got a buddy next to me sitting there going, you know what, let's do this together, I'm like, we can do this.
Yeah. Absolutely. No, I agree with that. I can't tell you how many times I get asked, what do you think about Starbucks? Or what do you think about, Walmart? I'm like, look at them. I said, you don't understand what I did. I became part of the crowd or the group or community who could add and subtract fractions incredibly fast in our head, right? We were called traders. We were market makers. We could care less which direction Walmart or Starbucks was going to go. All I needed to know is that could I manage my inventory in a delta neutral way, manage Vega, manage all my Greeks, what we call Greeks, in such a way that I can capture my edge and monetize it. And you know what? I didn't care which way it went. I really didn't. So, and people don't understand that. I said, look, that's how I grew up. That's just where I came from. I'm not saying it's right, because you can't do that anymore as a retail trader. You don't have the ability to compete with the electronic market makers who have billions and billions and billions of dollars. That game's over, right? For us. Now we have smart people like Tom and Wayne who help us manage our way over that mountain. And I think people are just, the education community has been awesome. You guys, are part of it. I just think it's awesome. I think it's a guiding light in a really, really, what could be a murky path for retail folks, right?
We all started there. I mean, I started up as an auto technician in college and ended up getting into options and doing the whole trading seminars and things. And I mean, that's eventually how a hedge fund ended up finding me, and I started working in the industry. That was totally a different world. I mean, I remember when I first started out, I walked into Scott Trade and I said, what is an ETF?
Right. But it can be done, right? So
that mountain can be climbed, with people. I mean, Tom was doing this back when I was learning. So
right. That's awesome. No, this is good stories. Thanks for coming on, you guys. I really appreciate it. People are going to get a lot of value out of this, and it's aeromir.com and then sleepwellinvest.com.
Yeah,
that
both
correct?
will get you. Yep.
Okay, good. So, folks, have a peek and sign up with these two gents. They're awesome. So thanks for coming on, Wayne and Tom.
Hey,
No,
thanks,
love
Lex.
it.
It was awesome.
All right, good
Yep.
deal.